Bitcoin is now being spoken of as gold 2.0, a store of value. If you're seeing the Bitcoin ticker on business shows, economic forecasts, then Bitcoin has already won. It doesn't have to become, from this point, a cryptocurrency. So stay tuned for more on that. So, is being gold 2.0 enough for Bitcoin? Does it guarantee its future? In this video, I'm going to explore how gold has been so important for financial systems. Just in the 20th century, there's so much that has happened with fiat currencies being pegged to gold, the Bretton Woods system, all of those things. Now we have something that is designed to be a store of value from day one. Surely that alone means that its future is almost guaranteed. It's going to have that intrinsic value. Now in ancient times, as I said, gold was just naturally attractive and therefore became pretty valuable, pretty important, and people wanted it for whatever reasons, whether it was jewelry or just to hoard and collect as some kind of treasure. The ancient Egyptians were actually the first one to put some kind of value to gold. They actually pegged a ratio between gold and silver. And of course later on currencies were fashioned from gold coins, not perhaps pure gold, but some value of gold as part of the alloy. But it had to have gold because that was where the value was. There was simply nothing else. The store of value gold thus became important as a medium of exchange between nations to settle their balance of transfer debts. So that is another reason why a store of value is so important. It's something of sufficient value that on a large scale, entire nations and perhaps large organizations can exchange between themselves in order to settle debts at a really high value. So that's two use cases: savings and large-scale settlements. Okay? So what happened after that? We had two world wars. Now, the value of gold and the impact of gold, some historians and economists actually say that because of the system of gold that we had, the Second World War was actually caused in part by global markets, currencies, and the way the gold system was set up, which favored the United States. So the US in the 1930s pegged gold to $35 an ounce. This implied that they had a specific reserve of gold, obviously in a place like Fort Knox, and they would print X number of dollars. Most of the European countries in the 1920s had a gold-backed currency. It was absolutely necessary at that stage. So people saw that you couldn't print at will. There was, however, one exception, and that was Germany. Germany did not have a gold-backed currency in the 1920s coming out of the First World War. And what we saw in the 1920s was hyperinflation in Germany because they printed at will and the value of their currency took a nosedive. That hyperinflation played an increasing role in the austerity-like conditions, the unhappiness of the Germans, and what then led to the 1930s, the rise of Hitler and his rise to power, basically. Right? America itself played with the pegging of gold to the US dollar. There is a theory, though, that America pegged too high in the 1920s, had the Great Depression in the 1930s, and then overprinted money at the end of the 1930s, leading up to the Second World War. Now, why this is important is because, and I'm not going to dive too much into this history of gold in between the First World War and the Second World War period, but it's very important to understand this to see once again the importance of that store of value and how entire nations depend on it, and how civilization itself depend on it. Some countries at that period of time leading up to the Second World War, and this is also an important point, wanted to go it alone. Germany, Russia, and Japan. These countries felt that they didn't need to trade with others, so there would be no balance of payments. They could produce for themselves, have their own industries, which is why they invested heavily in industrialization. And that's why in the run-up to World War II, Germany and Japan were major industrial nations. This was a concept known as autarky. And this also played an important role in World War II. Without going into the details, you cannot do it alone. We live in an era where now in 2019 we see a whole bunch of trade wars. Trade is essentially an essential element of global economics. You can't go it alone. You can have tariffs and you can have trade deals, bilateral deals, multilateral deals, but you cannot live in isolation. So these countries figured out that if they were going to go it alone, they need more resources. They needed to secure more for themselves. Lebensraum, as Hitler coined it. He wanted more land in Europe, and the Japanese wanted an empire in Asia. And they looked to mainland China and Korea, as well as islands in the South Pacific. So that's one of the reasons. Their economic policy of going it alone, closed economy, and not trading, meant that they quickly found out that they couldn't survive without trade. They needed more resources for themselves. Okay? The European countries at this stage, with their gold-backed currencies, found it easy to trade with one another, as well as the now solidified superpower of the early 20th century, the United States of America. Now at this point, this is such a fascinating topic. There are books and books on this subject. The one that I'm reading at the moment, which I'm happy to plug, is a book called Iconoclast. So this is a book on supply-side economics, right? But even on this very particular topic, it's by Brian Domitrovic. Okay, the book is fairly rare. You can get it on Amazon. Being rare means that it is deflationary, economic joke, store of value joke. Even on a topic as niche as this, not just economics, but in particular supply-side economics, the early part of the book goes into the history of what? Gold. Because it is that store of value and it played such an important role. So I advise you to read this book if you're interested in supply-side economics. From what I can see in the US right now, due to the inherent conditions of the US, the young people especially are against what they call trickle-down economics. I'm not going to get into that debate, but I think there's more to it. If you look at economic history in the 20th century, the supply-side economics and trickle-down economics was actually needed to come out of the stagflation crisis, which could have been caused by moving off the gold standard, but I'll get to that in a minute. Up until World War I, most currencies in the world were backed by gold. After the First World War, though, a lot of countries had massive debts, and they needed even more money to rebuild infrastructure. Countries took a decision to move off the gold standard in order to print more money, to pay debts, and to rebuild infrastructure. What they didn't realize, however, was that this would lead to hyperinflation. You're printing more money than gold reserves that you had. You couldn't settle your debts with other countries. You're saying that you can by printing more money. It's amazing how years later people still don't get this. Because this is a mistake that was repeated many times. So economies like Germany had hyperinflation in the 1920s. Even in the US, we saw the Great Depression of 1929, the stock market crash of 1929. And what happened then? People flocked to commodities and stocks, and the best commodity for thousands of years has been gold. The price of gold then boomed. So keep this in mind. Everything that I'm describing, I'm going to bring this back to Bitcoin very, very soon. Price of gold boomed and they couldn't keep up. So even though the US was the dominant power at the end of the Second World War, it too had significant debts after the Second World War, rebuilding infrastructure, as well as paying money to its allies to rebuild in loans and things like the Marshall Plan. So the US didn't come off the gold standard at the end of the Second World War. However, they needed a better system. They had experimented with fixing the price of gold to the dollar in various formats, and it was sometimes undervalued and sometimes overvalued. So in 1944, we had the Bretton Woods Agreement. The Bretton Woods Agreement would fix the price of gold to the US dollar, and other countries could interact with the US dollar, have a sort of exchange rate between their currency and the US dollar. The problem was that the US at that stage had 3/4 of the world's gold. There wasn't enough gold for other countries to maybe even adopt a gold standard. If they did adopt a gold standard, there wouldn't be enough supply of money, right? Because they had such little gold. The Bretton Woods system also gave rise to the IMF and the World Bank. However, in 1971, the Bretton Woods system collapsed. The 70s, as you know, was the era of stagflation. Not enough job growth, rising inflation. There are many reasons for this, and once again, there are many books that you can read to figure out more on why this happened. The president at the time was Nixon, and he tried to deflate the value of the dollar relative to gold. What happened was that people started exchanging their dollars for gold. People felt more safe holding gold. Once again, the store of value that everyone turns to in difficult times. What happened after that was Nixon felt he had to increase the money supply. So in a very famous move, he took the US off the gold standard, which they probably thought was the right thing to do at the time, in order to print more money. This didn't have the desired effect immediately. And many people say that the global economy is still suffering as a result of coming off the gold standard. It did, however, give us an increased money supply, but it led to the value of gold in dollar terms rising significantly. Okay, so gold then became a very good investment from that point on. Now I'm going to stop there and talk about Bitcoin. As I said, Bitcoin was designed from day one to be a store of value and potentially a currency. And many people are saying, well, it's not really a currency at the moment. I'm saying, if you look at the history of what humans chose to become a store of value, simply because it was the shiniest metal, then the future of something designed to be a store of value looks very bright indeed. Because the importance of a proper store of value to global economics in terms of savings, in terms of a medium of exchange between large entities to settle balance of payments, to settle large debts, right? Companies as well as governments could settle their major debts in future between each other in Bitcoin. Why not gold? Gold's worked for thousands of years. So there's a couple of things to consider. Gold is a metal. It's heavy. It has to be stored somewhere very safe. Why do you think the US built Fort Knox? Are you going to build your own Fort Knox? I don't think so, right? And it's difficult to transport. People know that it's there. If you build your own Fort Knox, people know, okay, what's in there? What's in the bank vault? And it's heavy. And while there isn't an infinite supply of gold on the planet, we are closer than you think to robotic asteroid mining. And you've got to think 50 years out into the future if you're making any type of investment. 50 years in the 21st century is probably half a lifespan. The average age of the human being will rise and rise and rise. The average lifespan, I mean, not age. And we're not, think about it. Are we more than 50 years away from asteroid mining? No, we could do robotic asteroid mining in the near future. And if you look at the asteroid belt that surrounds the sun, just past Mars, for example, there's so many asteroids with metals, and the supply of gold there could be orders of magnitude more than what we have on Earth. Bitcoin, for example, was created with just 21 million bitcoins, created as a store of value. Mathematically, there will only be 21 million. And yes, some people say you could fork Bitcoin, and then you could have, Bitcoin A, Bitcoin B. We've seen a couple of these forks already. But if the world agrees that the original Bitcoin is this store of value, it will become hugely valuable, right? There's absolutely no doubt about it. It's a lot more portable than gold. It's stored electronically. You still have to safeguard it, absolutely. It will be trickier to safeguard in future. It's electronic, so it can, somebody can hack you and steal your keys and things like that. That is a concern of anything of value. However, Bitcoin, as you can see, is well poised to become gold 2.0. And I'm saying that is all it needs to be. So do some research, even if you're not into economics, do some research into the history of gold, and you will see why something that is poised to become gold 2.0 has a very bright future over the next hundreds of years, the next few hundred years, to be very, very valuable indeed. And remember, the only way to shut Bitcoin down is to shut down the internet. And right now, I don't think anyone is in a position to absolutely do that. The more nodes, the more hash rate you have, the more resilient the network becomes. We've seen in recent times that all these forks, all these altcoins, their hash rate, some of them it's even declining, even Litecoin, which is, people say it's Bitcoin's baby brother. And that's another reason why the original Bitcoin, having that hash rate, makes it stronger as a store of value. Being a store of value is kind of enough. We'll see what happens with the Lightning Network, but it doesn't have to become a currency. So I just wanted to do this short video, not really to go into the in-depth history of gold and economics in the 21st century, the gold standard, the Bretton Woods Agreement, gold backed by the dollar, and in 1971, Nixon coming off the gold standard. I wanted to just touch on these events, so maybe if you're interested, you do your own research. If you find any nice links, share it with us in the comment section, any nice articles on the 4 or 5 talking points above. But if you're interested in Bitcoin, do a bit of research on those events and you will see why a store of value has been so important to civilization. And I believe going forward for the next few hundred years at least, Bitcoin will be so important to our future civilization, which bodes well, and which also makes you think that $10,000 per Bitcoin is an absolute bargain. From here on, I don't have to say what you're thinking. You already know what to do next. Okay, so I hope this video was interesting, not the typical crypto video. And if you enjoyed this type of video, let me know and I'll try and explore. Economics is one of my hobbies. It's one of my subjects. I'm not an economist, but I'm a technical guy, but it's the one topic that fascinates me. So I'll try and do more of these type of videos on this type of topic. And I hope you enjoyed the video, and I will be seeing you very, very soon. Have a good day.